Curious about why the S&P 500 is the go-to choice for long-term investors? Ever wondered why so many people trust this index with their hard-earned money? Welcome back to our channel, where we simplify the world of finance to help you make smarter money decisions. Have you ever wondered why the S&P 500 is often recommended by financial experts for long-term investing? Or why so many people trust this index with their hard-earned money? Today, we're going to explore the compelling reasons to invest in the S&P 500. Did you know that the S&P 500 has historically provided an average annual return of around 10%? Imagine the power of consistent growth compounding over time, turning your initial investment into a substantial nest egg. We'll delve into how this index not only offers robust returns, but also provides diversification, stability, and a reliable hedge against inflation. Stick around as we break down why the S&P 500 is considered a cornerstone of smart investing and how it can help you achieve your financial goals. Whether you're a seasoned investor or just starting your investment journey, this video will give you the insights you need to make informed decisions. Let's dive in. What is the S&P 500? Have you ever wondered what exactly the S&P 500 is and why it's so significant? The S&P 500, or Standard & Poor's 500, is an index of 500 of the largest publicly traded companies in the United States. It represents a broad spectrum of industries and is considered a leading indicator of U.S. equity market performance. The index includes household names like Apple, Microsoft, and Amazon, making it a benchmark for large-cap stocks. This diverse representation of companies provides a comprehensive snapshot of the overall health and direction of the U.S. stock market, making the S&P 500 an essential tool for investors. Definition and purpose. The S&P 500 was created by Standard & Poor's in 1957 and is designed to provide a snapshot of the overall U.S. stock market's health. It includes companies from various sectors, ensuring broad representation. Market capitalization. The companies in the S&P 500 are selected based on their market capitalization, which is the total market value of their outstanding shares. This ensures that the index includes the most influential companies in the U.S. economy. Why it matters. The S&P 500 is widely regarded as one of the best benchmarks of U.S. equities and is used by investors to gauge market trends and performance. Historical performance of the S&P 500. How has the S&P 500 performed over the years? The S&P 500 has a long history of providing strong returns to investors. Since its inception, it has delivered an average annual return of around 10%, making it a reliable choice for long-term growth. Even during market downturns, the index has demonstrated remarkable resilience and recovery. This track record underscores the S&P 500's ability to bounce back from economic challenges, providing investors with confidence in its stability and potential for consistent returns over time. Such historical performance highlights why the S&P 500 remains a cornerstone for investors seeking to build wealth and secure their financial future. Long-term growth. Historically, the S&P 500 has provided an average annual return of approximately 10%, which includes periods of significant market downturns and recoveries. For example, despite the 2008 financial crisis, the index recovered and continued to grow, reaching new highs. Compound interest. Investing in the S&P 500 allows you to benefit from compound interest, where your investment gains generate additional earnings over time. This effect can significantly enhance your wealth, especially over long investment periods. Real-life example. If you had invested $10,000 in the S&P 500 in 1980, your investment would be worth over $700,000 today, assuming reinvested dividends and average market returns. Diversification and risk management. Why is diversification important, and how does the S&P 500 help manage risk? Diversification is a fundamental principle in investing, and the S&P 500 offers built-in diversification by encompassing 500 of the largest publicly traded companies across a wide array of sectors. This broad inclusion means your investment is spread across various industries, such as technology, healthcare, finance, consumer goods, and more. By investing in the S&P 500, you inherently reduce the risks associated with putting all your money into individual stocks. This diversified approach helps to stabilize your investment portfolio because the performance of different sectors can offset each other. For instance, If the technology sector experiences a downturn, gains in the healthcare or consumer goods sectors might balance out the overall impact, thus providing a more secure and balanced investment strategy. Accessibility and ease of investment. How easy is it to invest in the S&P 500? And what are the options? Investing in the S&P 500 is straightforward and accessible for most investors, regardless of experience level. One of the most appealing aspects of this index is the variety of financial instruments available to track its performance. You can invest through mutual funds, specifically designed to mirror the S&P 500 by holding the same stocks in similar proportions. Additionally, exchange-traded funds, ETFs, offer another popular and flexible option. These ETFs, such as the SPDR S&P 500 ETF, SPY, or the Vanguard S&P 500 ETF, VOO, can be bought and sold like individual stocks on the stock exchange, providing liquidity and ease of access. This means you can effortlessly invest in the S&P 500, taking advantage of its historical growth and stability, without the need for complex strategies or large sums of money. Low costs. Investing in S&P 500 funds typically involves lower management fees compared to actively managed funds. The average expense ratio for the SPDR S&P 500 SPY index fund is around 0.09%. The average expense ratio for the Vanguard S&P 500 VOO index fund is around 0.03%. Inflation hedge and long-term stability. How does the S&P 500 serve as a hedge against inflation and ensure long-term stability? The S&P 500 has proven to be an effective hedge against inflation, as the companies within the index can often pass on price increases to consumers, maintaining profitability. This ability to adjust prices helps protect your investments from the eroding effects of inflation. Additionally, the long-term stability of the S&P 500 makes it a reliable investment choice. The index's consistent performance over decades provides confidence in its capacity to generate steady returns, making it a cornerstone for long-term investment strategies. Inflation hedge. Companies in the S&P 500 can adjust their prices in response to inflation, helping to maintain their earnings power. Historically, the S&P 500 has outpaced inflation, preserving the purchasing power of investments. Long-term stability. The S&P 500's consistent performance over decades provides a stable investment option. According to a study by J.P. Morgan, holding investments in the S&P 500 for at least 20 years has historically resulted in positive returns 100% of the time. Real-life example. During periods of high inflation, such as the 1970s, the S&P 500 still managed to provide positive real returns, demonstrating its resilience and effectiveness as an inflation hedge. Investing in the S&P 500 offers numerous benefits, including strong historical performance, diversification, accessibility, and a hedge against inflation. By understanding these advantages, you can make informed decisions that align with your long-term financial goals. The S&P 500's average annual return of around 10% and its resilience through market downturns make it a cornerstone of smart investing. Imagine securing your financial future with an investment that has consistently outperformed other assets over the decades. Additionally, the ease of investing through mutual funds and ETFs makes the S&P 500 accessible to virtually any investor. Whether you're a seasoned investor or just starting, the S&P 500 provides a reliable path to building wealth over time. So take the step towards financial stability and growth by considering an investment in the S&P 500. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more financial tips and insights. Your journey to smarter investing starts here. Thank you for watching, and we look forward to seeing you in our next video.